In this video, we're going to talk about Realty Income, and the question is the company a buy, hold, or sell going into 2025? One thing for sure is that if you want a company that pays dividend, Realty is your company, as they do pay a nice monthly dividend. That's right, a nice monthly dividend. Now, before we get into the charts, let's look at this article. It is coming from the Motley Fool. So Realty Income pays its dividend every month. While this is not all that unique, it is something that the company takes very seriously. It has raised its dividend every year for the last 30 years. That's pretty crazy. Making itself known as the Monthly Dividend Company. Putting aside the company's prioritization of its dividend, Realty Income also has to pay at least 90% of its earned income and earnings out as dividend because it's part of the REIT family, Real Estate Investment Trust. So while Realty was paying a 5.6% yield, S&P was only paying 1.3%. And again, Realty is paying these dividends monthly. Realty Income's business is owning real estate and leasing it out to clients doing business in 90 separate industries. Realty's strategy of leasing to so many distinct industries provides diversification for its real estate portfolio. So if one sector of the economy is going down, hopefully the other industry can offset the one that's going down. So is Realty recession proof? Not really. Since its pre-pandemic high, Realty Income stock is down 34%. Yes, and this is while the S&P US REIT index is down 17%. Or this is why S&P is up nearly 100% over the last couple of years. Despite the stock's performance, the Realty Income has done quite well for the last 5 years. It's grown revenue by 237%. Now, they use a metric in the REIT industry known as funds for operation, which is a proxy for earnings when talking about REITs. This has increased 210% over the same period. Seeing these two metrics triple in 5 years, one might be surprised why the stock is down 30%. All right, so let's get into the charts, because as price continues to go down, that yield even becomes more enticing. All right, so this is the monthly chart, and where did price stop going up? It started going down. That was at $65. And where did price stop going down? It started going up. That's at $45. Now, one thing I want to note, because this pivot high and the move higher did not take out this pivot high, the sellers are in control. Keep that in mind. So if and when price returns to the $45 level, that may not stop price from going down lower. Just keep that in mind. Let's go to the weekly chart. And I do see a weekly sell level drop, base drop, but that's in the middle of this range here, and anything in the middle you have to anticipate choppiness. As you can see, price not really making any trends. Now I look at current price and I go down into the left, I see this level here, but not really on high volume. So we're going to analyze that level a bit more. Rally, one basic candle, and then a rally out, and price attempts to come back to that zone, but the buyers are not having it. They're protecting this $51 level. Let's go down to the daily chart. All right. So how was that level formed? Had this rallying into the zone, basing candles, and then the rally out. But it's not on high volume. Nevertheless, you have to respect the level as price action was respecting the level. Scrolling it back out to the daily chart, the charts are suggesting price is going to continue to decline, but potentially pause and reverse. However, what you want to do to confirm that reversal is look for a double bottom or trend line break on a taller time frame. Thanks for watching. Subscribe. Please like the video.